There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome back to the Trading Justice Podcast presented by Tackle Trading. This is a 5-star rated financial podcast. As many of our loyal listeners know, we like to talk about stocks, options, currencies, commodities, the Fed. Well, we don't like talking about the Fed, but we do talk about the Fed anyways, and we'll certainly talk about the FOMC today, the ECB, the Bank of Japan, because it obviously has a lot going on right now in terms of the market action as well. Tim Justice, my co-host, and producer Phil, who produces the podcast. Tim, how are you today?
You know, I'm doing fantastic. You couldn't beat me down if you tried to. Had a wonderful day yesterday, even better day so far today. I'm enjoying life, Matt. Although I do got a pain in my shoulder. I don't know if I slept on it wrong or not. I've been complaining about that a little bit. But other than that, I'm doing great.
Awesome. You know, it has been a fantastic day so far, and I'm not just talking about the market. However, I will say for the last 15 minutes, I've just been trying to unsubscribe to spam in my email, which is driving me a little crazy, to be perfectly honest with you. But, you know, every now and then, everything you click on, Tim, seriously, everything you click on now on Facebook, even if it's accidental, they get your email address and they start hitting you with emails, and it's just, oh my goodness, come on, this cached targeting type marketing campaigns. No wonder Facebook is so successful in making a lot of money, because they just have these targeted campaigns that people will pay a lot of money to.
There's no question about it. I had an old Yahoo email address way back in the day, Matt. Remember when Yahoo was really popular? First email I ever created, actually. And I ended up abandoning it probably like 9 years ago. I check it like once a year in case somebody from college had emailed me that I hadn't heard from in forever. One of my professors had that email address that got a hold of me once every blue moon. And I went back in there recently, and there were so many thousands of spam and garbage emails, nothing of substance. I mean, even just clearing it out, a complete waste of 1 hour of my day that I did. That was a few months ago. But I'll tell you, I mean, sometimes I guess you got to just light them on fire and send them off into the good distance.
Yeah, you know how we just got new legacy emails for all of our students?
Yeah.
I've always had a legacy email because back when I was director of Rich Dad, and I logged into there for the first time in, I think, 4 years, okay? And there were thousands upon thousands upon thousands of emails. And this is a company, Outlook company email, and there was not one email that was not spam related. And I don't know how they got the email address. It's not an email address I use. It's not something that I've clicked on using with social media. I honestly believe that there's marketing companies out there that simply buy email lists from the email providers. And
sure, and even though the laws have gotten more stringent, Matt, they're still not strong enough because these companies continue to violate them. I know that there's a lot more spam laws out there, but even talking to email marketers, I'm like, you guys are shady, man. I'll tell you. It is what it is. I get it.
Tim,
I'll give you an example.
You can have a law, but if it's not enforced, so what? It's on the books. It's not enforced.
Sure. LinkedIn. I'll give you an example of a huge publicly traded company. LinkedIn actually had this thing where when you signed up for them, it was like it asked you a question. Do you want to invite your friends? And it would invite your friends and send them an email, and then it would continue to send them emails until they finally caved in and logged in and registered for LinkedIn. Now, all of a sudden, now you look like an asshole because you've been inviting them via email over and over and over again. But I guess LinkedIn just recently got sued over this, and they've got a class action lawsuit. I got something in my email asking me if I wanted to participate in the class action lawsuit settlement.
Wait a second. Hold on. Mm-hmm. So LinkedIn gets sued for doing this, and then a class action. How'd the class action lawsuit get your email?
Well, because this happened with my email. I registered for LinkedIn. I think, honestly, I registered when we started this podcast because I'm like, oh, man, I'll get out there on LinkedIn. And it asked me, do I want to invite my friends? And, of course, if you're trying to build something out like our podcast, you're going to want to network, right? Well,
I'm
it
just
just
saying, no,
auto
what I'm saying,
spam
Tim,
everybody, right?
I get that, but what I'm saying is you have unwarranted spam of email, right? There's a class action lawsuit that gets unwarranted spam of email, and then they are now, this class action lawsuit, to drive demand for their lawsuit, they're now doing unwarranted email. Okay, that's what I'm saying.
I get what you're saying. Yeah.
That's how insane it is, man. It's like, okay, are you now going to sue yourself for the same thing? It's just ridiculous. And,
Right.
so I've spent the morning and, cleaning up email to make sure I only get email from, students and, from our companies and corporations and all
Is
that
there any
jazz. So
more disgusting statement about modern society that we have to clean up our email? Ay, ay,
it is
ay.
disgusting. It is flat out disgusting.
Oh.
Can't stand it. It's worse than the Fed. LinkedIn,
Yeah.
Facebook, Twitter. What's some more
Well,
out there?
I'll give you an
Instagram.
example of this,
Worse
Matt.
than that.
It's funny that you brought this up. Just the other day, I put a rant on Facebook. And I'd have to go back and read it, but basically, to delete some of my emails when I'm in my phone, I'll click on the email, then click delete, which is just, I don't know why I don't have a different way of doing it. That's just what I do. But when you open advertisements, those companies now do what's called retargeting. So every time I go to Facebook now, I'm getting skull candy advertising.
Buy some skull candies, man.
Right, because I got something in my email. They've got some wireless new headphones. I clicked on it to delete it. I didn't even want to look at the ad. And now they're sending me advertisements in every social media form that I have. Unbelievable. I don't want skull candy earbuds right now. I've got 2 extra pairs, dudes. And plus, you got a lifetime warranty. Even if I break mine, I get free ones. So we're good. We're good. I don't want them. This is what I said on Facebook.
It's ridiculous.
I accidentally click an email from Skull Candy. Now an ad is in my Facebook feed. Retargeting makes me feel so connected with the ones and zeros out there. Thank you, interwebs. Yeah, now they'll probably hit me up even worse.
Oh, dude, now it's like if you say something bad about the NSA, they're going to target everything you say ever. Okay, so now that you've said something bad about the retargeters, guess what they're going to do to you?
They're
going to retarget you. And that is the introduction to the Trading Justice Podcast. Email spam, and I believe that's exactly what they came out here for you and I to bitch and moan about retargeting, email spam, and so on and so forth. Tim, did you know that we have a new Instagram page? So for the listeners of the Trading Justice Podcast, go out there and like the Tackle Trading Instagram page. Now we just need to get a Trading Justice one. Okay? We have to get Courtney on that one too. Yep, Phil, write that down. Courtney, Instagram, Trading Justice. Oh, what's on the agenda today? We didn't do a podcast last week. I was on vacation and you were speaking in LA. What's on your mind?
You know, the Fed has a meeting this week. That's on my mind. The Chinese currency situation is something on my mind. Draji came out and talked about the ECB policy. International currency is on my mind.
I want to ask you a question.
I was thinking about tacos for lunch.
Tacos are good. Who is more out of touch with reality? And I mean reality. Mario Draghi or Janet Yellen?
Well, if you were here in my office about an hour ago listening to me try to explain beta weighting to my student, you would say that I was most out of touch with reality. I got to tell you the analogy I use here in just a minute. But I do think Mario Draghi is probably more out of touch with reality. At least Janet Yellen works for the most powerful banking cartel in the world called the Federal Reserve. Mario is still more of a public figure. I don't think the ECB is tied in as much as the Fed is. So I think Mario's probably more out of touch. Plus some of the stuff he says. I mean, you know, he's moving this forward in an environment where I just don't get it.
I
But
loved his comment last week. It reminded me of his comment from last year when he gave the whatever it takes speech. Last week is like, yeah, we're not looking to lower the actual rate. We just want a more negative interest rate. And it's like, well, how are you going to get that without actually lowering the rate? You know, and we all know what that means. We all know they're going to increase the ECB quantitative easing policy. But it's amazing to me that these cartels known as central banks, they're so afraid of actually going to a negative interest rate. Even though all of their asinine policies where they put out trillions of dollars and euros and yen out there into the open market, it's like going to a negative interest rate. But if they announce they're going to a negative interest rate, the common people would actually understand it and would take advantage of lower interest rates versus if you just do, like, say, a quantitative easing, you're only really kind of, informing the other banks to take advantage of it. It's asinine. There's absolutely, it's like Stephen A. Smith would say, it's asinine, it's asatan. It's absolutely ridiculous what the ECB did last week, in terms of, and the euro got pounded, down 300 pips in one day. That's about a 2.5%, maybe a little bit more than that, 2.7% decrease in the euro against the dollar. It hit the 110 mark, which is a support level, bounced off that, and I think it's going to have a negative impact over the course of the next foreseeable future to the euro. But that's bad for European consumers. That's good for European companies.
Well, I'll tell you, it goes back. We have podcasts back in the early part of this year, in 2015, when they first introduced the asset purchasing program. And on this podcast, you and I both said over and over again, they want to move the euro to parity. Quite frankly, I'm surprised it took this long to start seeing more pressure, Matt. Even the euro today, where it's at 110, I still think you've got a lot of downside potential in that euro. When Mario Draghi comes out and says they're going to reassess QE, that means not just the size of the program, but the length of the program. They could go up way beyond $60 billion a month, and they might do it for a lot longer. We've seen this in our country. This is old hat stuff. History repeats itself. The Federal Reserve came out year after year after year after year and said, you know what, we're not going to extend QE. Well, QE1, QE2, QE infinity. Here we go to infinity and beyond, right? As my good buddy Buzz Lightyear would say.
Toy Story.
By the way, I've been quoting kids shows and singing kids songs all week.
I don't think I've ever seen anything more ridiculous than we were doing a stock basic training last night, and I had my headset on listening, and all of a sudden I heard you start singing children's songs in a training. And I'm just sitting there going, "Are you what?" And then I heard you drop, "Hey, don't get me started. I'm going to go Teletubbies." And I'm thinking to myself, Tim,
it was the Wiggles.
Seriously, dude? Oh, maybe it was Wiggles. But publicly, I wanted to chastise you, so I'll do that on the podcast. But I remember even
out tomorrow.
It's ridiculous.
Bet your bottom dollar that tomorrow the Fed will not cut.
You know this is being recorded, and you can't take that away. Okay, that's not being cut out of the podcast. You singing, that is utterly ridiculous. Seriously. Oh,
hey, listen,
wow!
If you've not sang out loud in a while, you should try it, my friend.
I sing in the car. I sing all the time. I don't sing in a financial podcast.
Okay, you sing in
I don't. Yeah, but I don't sing to my students, so I'm trying to teach technical analysis too.
Yeah,
that's not what I do.
Let me ask for a request. If you're going to sing one song, sing the Frozen song.
Not going to happen.
Yeah, come on.
I'll sing it with my darling little kitty cat.
I know that you and her sing it. I know you know every word. So I know you could sing it.
I got kids.
Yes.
I listen, I understand. I'm just saying there's a time and a place to sing the Frozen song. And that time is not on the podcast, and that time is on a training where you're teaching
Uh,
option strategies. That's all I'm saying. Call
all
me
right.
crazy. That's all I'm saying. So, anyways, going back to the
Back
euro
to
dollar
Mario
here,
Draghi then. The other
Tim.
thing
I
I'll say though,
remember.
I'm not done with the euro. Hold on one second. I'm not done on the euro. The other thing is that he kept talking about rates, where the rates should be, what should be. I mean, he continued to open the door for the idea that potentially lower negative interest rates could stay for a long time. He kept
Okay.
emphasizing the exchange rate and talking about deflation and all this kind of stuff. I mean, most of this testimony and all of the speeches I read and the comments I read from Mario, it really came out to me that they just want to kill the currency. This was an intentional strategy. I don't think his
It
words were,
reminded me, Tim, of June of last year when
yeah,
Draghi gave the whatever it takes, and they introduced over a 2 week time frame 3 different quantitative easing policies for the eurozone.
yeah.
One was like a minimal amount. The other one was like 600 billion euro. The other one was like a trillion euro. And they didn't say they were going to come out and do it. They're just kind of testing the waters. And that's kind of what the central banks do. Our Fed does it. The ECB does it. They go out there and they test the waters out to see how the market's going to respond to it. And the market responded. Back in June of last year is when I first made the statement that I see it going to parity. It was at I believe it was at like somewhere around $1.28, $1.33, something like that. And
Hmm.
when you hear about a currency going to parity and it's currently trading at $1.38, that is tremendous devaluation. I mean that's not a
Mm,
small devaluation. That is
mm,
ridiculous. That's a huge devaluation
yeah.
of a currency. And in the 8 months that followed that, the euro actually went down to a dollar oh four against the dollar. So the euro went down to a dollar oh four. So we were about 4 cents off from our target. It rebounded to the high of this year at about. It briefly touched $1.16. It's currently trading at $1.10 right now. And if it breaks that $1.10 level, it's a strong support level. But if they come out there and actually do it, it's going to go down to parity this time, and it's something that I do believe that the eurozone, not the eurozone overall, but the ECB led by Draghi, I think absolutely that's what they want. And there's an old rule in trading that says you don't fight the Fed, and you certainly don't fight the ECB either. And if they want to go down to parity, let's just take advantage of it. You know,
Yeah, for sure.
in fact, in my forex report, Tim, I was actually long euro last week. Until that announcement came out, I quickly reversed it into a short euro trade. And initially, I got beat up on the long euro off the announcement, but then made that back and more some on the short euro once the announcement was made. And again, they didn't actually do it, right? They just basically said, well, we're thinking about doing it in December, which basically means we're going to do it in December, right? And so but then today, or not today, but yesterday, France comes out and says basically that, you know what, I don't see a way they can lower interest. And you're looking at you're looking at this, and I'm thinking to myself, okay, France, let me teach you a thing. The euro is controlled by the ECB, which is a private institution, a private banking cartel. They have a Fed
Hmm.
fund a rate, an interest rate right now at 0.05. Okay, that's as low as you can get out there right now. And so when they say they don't see how much they can go lower, they're right. You can't. You can go to zero. You can go to a negative interest rate like the Swiss have done. But how the central banks, primarily outside of the SNB, which is the Swiss National Bank, how the central banks go to negative interest rates is basically they don't make the announcement that they're actually going to go to a negative. They just print more money and buy bonds with it to go down to a negative interest rate. And so what you're running into, and the Eurozone isn't there yet, but the Eurozone can certainly still go down further. They certainly have the ammunition to go down further from a quantitative easing perspective. The entity out there that's really struggling with this is Japan. Japan, the question I have for the Japanese is basically how are they going to go down to further? Because Tim, the Bank of Japan already owns like 90% of Japanese bonds. That's how they push interest rates down. Is they buy bonds, buy bonds, buy bonds with printed money.
Mm-hmm.
And so the ECB certainly has ammunition. I think the Bank of Japan is kind of running out of ammunition. It's going to be interesting to see what they do later this week. They're announcing monetary policy on Thursday. And the United States, I got one question for you, Tim. The United States Central Bank for a year and a half has told us they're going to raise interest rates. For a year. In fact, if you track back some of the speeches, they go back to 2011 where they have been saying they're going to raise interest rates. Okay?
Mm-hmm.
That's 4 years ago. Over 4 years ago. So, but they've really kind of been, and that's just a couple sub-members of the FOMC. But in the last year, you've had like 8 or 10 of the members, of the acting members of the voting members, say they're going to lower interest rates. But yet every time they meet, they don't do it. Every time. They had the opportune time in September. They're meeting again tomorrow. Tim, with the ECB announcing further quantitative easing, with the Bank of Japan trying everything they can do to enhance quantitative easing, one question for you. How is the Fed going to raise interest rates when every other currency is lowering interest rates and furthering into negative interest territory?
Mm-hmm. Well, I can't help myself. What I'm going to say to Janet Yellen is, let it go. Let it go.
Oh my goodness!
I've been wanting to try.
You need to spend more time with adults. Just a little bit more time with adults.
That's true. Of course, obviously, the charade, it's not going to happen. They're not going to raise rates, Matt. Stop the press lines. I mean, they're not going to do it. They're not popping rates back up in an economic condition where they know they're at the back end of a cycle, and there's risk that if they do it, they could destabilize the marketplace. Wall Street doesn't like it. They don't want it. In fact, Wall Street probably would twist the arm of the Fed. People don't understand this. I mean, the Federal Reserve and Wall Street, they play chess with each other in terms of the international markets and the value of the stock market and the bond market and all of it. If the Fed comes out, this is why every word matters in these statements, because Wall Street is poring over every word. If they put out a statement and they don't like it, they'll drop the market. And I don't think the Federal Reserve is in a position to raise. I think that Wall Street would sell the equity market, and I think that you would see volatility, and then there would be panic. The other thing we remember here, Matt, we're in a presidential cycle, right? Like it or not, the Federal Reserve is a private bank. I do know that, but there is politics involved here. You know, when you're dealing with that much money, there could be the potential for some political influence coming into the Fed as well. I think it's going to be interesting. I don't believe they will raise rates personally, and I think they've got to stop saying that they are. I think that they're setting an expectation that at some point they're going to pop them up, Matt. But you tell me what the market would have to look like for the Fed to want to raise rates. We would need better reports from earnings. I know that. We need better fundamentals. The valuation would have to come into line. And if you really look at the Labor Department numbers, and this is the key for me with the Fed, they say we're at 5.5% unemployment or 5.3 or whatever it is right now. But when you actually break it down by demographic and how many people are out of the workforce or underemployed, and they see those statistics, they know the economy's not on strong footing.
No, it's absolutely not. I mean, you break down the labor market numbers. Here's the thing that people like you and I bring to the table to our listeners, our subscribers over there at Tackle Trading, our team members, our students with Legacy, all of this. We understand the Fed because we've tracked the Fed for a very, very long time. And for a very long time, the Fed stated that once the unemployment number got under 6%, they were going to look to, it was 6%. They were going to look to normalize monetary policy, which means they were going to look to stop doing asinine policies like quantitative easing. Then once it got to 6%, they said 5.5%. Then once it got to 5.5%, they said 5%. And currently it's at 5.1%. And now that more and more people are starting to understand that the Fed is just a bunch of sheep, basically, they've now changed their tune, and they're now changed their tune to the same thing that the Bank of Japan has said for decades now, and basically says we need to spark inflation. And so now the argument at the Fed has moved from, the labor numbers because the labor numbers, they know damn well that 5.1% unemployment is not 5.1% unemployment. The real unemployment number is north of 17%. And if you actually break down the demographic over the last 5 years, over the last 6 years, from the time in 2009 it hit the high above 10% to now 5.1%, it's people that are ages 55 to 69-year-olds that are going back to the workforce because their zero interest rate policies have killed savers, is what it's done. And so basically now they've shifted that argument because they know the labor argument is nonsense, and people are now starting to become aware of how completely insane that the labor argument is at the Fed. So now they're starting to do inflationary arguments, and they're like, well, we live in a deflationary environment, and tracking based on the CPI report, the Consumer Price Index, we need inflation to get back up above 2%. And so what the Fed is now telling every consumer in America is we want to raise your cost, is what we want to do. We want to push and push and push and print and print and print so it sparks inflation, because we need inflation because inflation is good. Yet I haven't met one person in my travels, and Tim, you know how many people I teach? Thousands and thousands and thousands. In New York, Chicago, Boston, Atlanta, Dallas, Houston, San Francisco, all over online, LA, you name it, Seattle, Portland, Austin, Oklahoma, North Carolina, you name it, okay? Online everywhere. I haven't met somebody that has had a decrease in cost of living that was not forced because costs have been too high.
Well, that's right. And I think it is something that everybody out there should have you need to embrace a change of mindset, because cost of living has gone up for as long as I've been alive, Matt, personally, for me and what I've seen from people. I remember we have an uncle, John, who used to tell me, Tim, if you make enough money, you can live off the interest. And we will not go down the rabbit hole of talking John today, by the way. Okay.
Not anymore, John. There's some other things John said too, Tim, that we could talk about.
We don't have time for it today. Believe me, we should have a podcast where we tell stories about our uncles and the bad financial advice we got from that side of our family, but not today. Yep. So the thing about it is that was the 1980s. The markets changed. Then I remember, the 1990s, and the dollar was very strong. I used to be able to fill my car up for gas. I bought my very first car. It was an old Volkswagen Jetta, and I could fill it up for like $12. I mean, literally, it was gas was cheap. Gas was cheap, yeah. And it's not that way anymore. Food, gas, everything you can imagine, cost of living has gone up. I read a statistic recently, Matt, that it's going to take over $1 million to retire. And I used that statistic today in a class I was teaching, and I had some students from Hong Kong. And they said, Tim, we need way more than that. If you project out the cost of living, if you're living in any major metropolitan city at all, and you want to actually sustain your lifestyle, you probably need a pretty big figure, and you need to start thinking about how do I grow, protect.
The simple reality is
not going to get you there.
The simple reality is this. The reason that a vast majority of consumers, not just here in the United States, but everywhere, okay? I don't care if it's Japan, China, the Eurozone, Canada, the US, Australia, don't care. The reason a vast majority of people will always work or will be broke and basically living in substandard housing and cost of living when they retire is because of the Fed's policies. Okay? The Fed has killed savers, number one. They're driving up costs, number two. And when you account for inflation itself, people have not made any more money since 1979. Since 1979. Yeah. And if you talk about $1 million, people think $1 million is a lot of money. When you talk about $1 million, for a man who retires at the age of 62, they're going to live another 10 years. Okay? Every dime. So basically what the hope is at $1 million is by the time they run out of money, they die. That's the hope. Think about that as a retirement model. By the time I run out of money, I want to be dead. That's the entire retirement model right now. Well, that's for a man. Take into account a woman who historically makes less wages than men, working at the same type of job, same type of incomes, who has less advancement than their male counterparts, which is absolutely god awful wrong. It's horrific, and we should do a much better job in terms of equal pay and equal rights in the labor market. But for women, they're not going to live to the age of 72. They're going to live to the age of 80, which means now they make less money, have less retirement statistically, and so by the time, let's say they have $1 million when they retire at 62, which is, let's say they have $800,000. By the time 18 years go on, they hope to die before they run out of money, which means they have to lower their cost even more, Tim, even more. But that's at $1 million. The average 401k, and this takes into account men and women, the average 401k in America today from the ages of 55 to 69, these are baby boomers who should be retiring, right? The average 401k today doesn't have $1 million, T. This is after 40 years of saving. The average 401k has $76,000, which basically says either one, $76,000. You want to die in 2 years after you retire. That's when you want to die, or you're broke. Okay, and you're living on Social Security, which will not be there for my generation. The problem with all of this is the model. The model of park your money in mutual funds and pay Wall Street trillions of dollars every year to manage them, and you collect 30 cents on every dollar that they earn. Okay, I was talking to somebody at one of my events a couple weeks ago, T, and they said, "Oh yeah, I've done actually pretty well over the last 6 years," and I had them hand me their broker statement. In 2009, they made about 20%. Okay, total. And I'm talking from where they were at the beginning of 2009 to the end of 2009. In 2010, they made like 10%. In 2011, they broke even, 0. In 2012, they made about 9%. In 2013, they made 20%. In 2014, they made 5%. And so far this year, they made 0%. Which means over the last 6 years, based on them believing they did good, they've made approximately around 64%. Okay, 64%, and that's actually what I was trying to explain to them is that's actually below average over what everybody else has done. Okay, in mutual funds. But the problem is this, T. Here's the biggest problem with it: they don't take into account that a lot of those increases in what they've done is them putting money into the fund. So basically what I was trying to explain to this individual is let's take your break even so far this year. Okay? You've put in $3,000 in terms of what you have taken out of your paychecks. You've actually lost $3,000 in your funds. You're break even because you worked your ass off to save the money to put into the fund that underperforms everything else. And did you know this? Did you know this, Tim? For a fund, a mutual fund that has been trading for 10 years, the average gains that they can promote to their clientele, guess what they can do for their worst year out of every 10 years? They can just say it never happened. They can literally just cancel it out. So what a lot of these funds have done is the worst year they had was in 2008, right? They don't report 2008. They don't report it in their average gains. Hedge funds, they have to report everything. Hedge funds are completely transparent. Drawdowns, average drawdowns, you name it. Mutual funds don't. It's absolutely, to me, it's absolutely insane what is going on here. People save for 40 years. They don't understand that every dime they save has less value in the future. That's number one. That's inflation. And with 0 interest rates, if you have $100,000 in a savings account, in a cash account right now, T, which a lot of baby boomers have been saving money for retirement, they make literally like $300 a year in interest on that. That's why your Uncle John, and I mean your Uncle John, that's why your Uncle John was dead wrong in what he was saying. If you make enough money, all you do is got to collect the interest on the savings. That's that baby boomer mindset, because that's where they grew up. But where they grew up, the Fed fund rate wasn't constantly 0 to 1.5%. That's only
That's
been
right.
since 1982 that we've lived under that model. And so it's like the same thing that they were taught in the 60s and 70s. It's like, oh yeah, let's continue to do that in the 2010s. And it's like, are you insane? Are you insane? Every time you save money, you are asking to lose money. That's what you're asking to do. There's got to be a better way. You got to invest it. You got to learn how to
It's just,
trade it.
it's coming from such a position of weakness, that mindset, Matt. And I'm not even going to mince words here for a minute. I'm listening to you, and I agree with you 100%. The people that really inspire and empower me and get me thinking about moving in the right direction, they're people that make decisions in strength. I
Yeah.
think the idea of just saving, 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 and then hiding and tucking away and hoping the big bad market doesn't come and get you, that is just such a weak mindset. It comes from a position of weakness. It's from
It's a
people who
loser
don't have the
mentality.
knowledge or the education. It is a loser's mentality. And I don't like saying that in such a fierce way, but it's true. I heard Todd Bowles. Do you know who Todd Bowles is? From the New
He's
York
the
Jets, head
coach of the
coach.
Jets.
Yeah, yeah. He came out. He was in a press conference the other day. They just got beat by the Patriots or something like that last minute. And he said, listen, if you show me somebody that's okay with losing, I'm going to show you a loser. I'm not okay with losing. That quote just struck
And you
me.
know what? And Tim, you know what? A majority of American consumers would be offended by that. They would.
Yeah,
They would be
yeah.
offended by the fact that you can call somebody a loser because how dare you? How
Well, there
dare
are
you
winners and
judge what
losers in
I
life,
do?
right?
Are you
Listen,
freaking kidding me? Are
we
you
keep score. That's right. We keep score in
Lord
life. I'm
Almighty?
telling you, we do.
You
And
do.
if,
You do. You
if
have
we
winners
keep
and
score,
losers.
that's
He who
right.
works hardest, he who puts out there, he who knows more. And when I mean he and she. Okay, I just don't want to say he and she every damn time. He who works the
Don't go on
hardest, he
that.
who
One rant
invests
at a
the
time.
most, they're going to be more successful. There's X
Yes.
amount of supply money in the system. That is a fact. Would you agree with that?
Yes.
X amount of
Yes.
supply. There is X amount of debt in the system. Okay? Knowledge breaks the tie. That's what it does.
Correct.
You don't randomly fall into that. Knowledge breaks the tie. You got to put the work
Well,
in. And if you want to sit
preparation
there
and
and save
execution.
money and go work for other people, then by all means enjoy your zero retirement. That's the
And
truth. And if you don't
it's
want to
true.
hear the truth, don't listen to our podcast.
Yeah, I agree, and I'm tired of mincing words with it. I am a high five a stranger on the street kind of guy. I can get
Sir,
along with
sir,
anybody. I
sir.
absolutely can. Welcome them into my backyard for a barbecue. I'm sure we'd have a great time. But at the end of the day, I'm also a mentor, and my job is to tell people what they need to hear. It's not my job to mince words. If somebody's messing up, it's my job to tell them what they need to hear. I'm looking at the economic fundamentals, and sometimes I get to do that in song, Matt, which maybe I'll break another one out here in just a minute. But
I'll
I'm
listen.
looking. I'm looking at the news and the fundamentals, and I'm seeing some very serious developments. And I'm seeing it in Europe. I'm seeing it in China. I'm seeing it in commodities. I'm seeing it in currency all over the world. But I think maybe most importantly, Matt, I'm seeing it in people. People are becoming complacent. It's very difficult to get them to make a change of emotional state from this complacency, this everything's fine kind of attitude to where they actually have to go out and start doing something. You know,
Yeah.
and there are only so many ways to compel people. At the end of the day, there has to be a fire in there somewhere. You can throw as much gas on them as you want. If they don't have any flame at all, they're not gonna burn, right? I
Yeah.
mean, there has to be a fire somewhere in there that makes them want to actually grow something great and get under control. If you just save in this country, if you just save in general, you're missing out. You're missing out on the whole point of capitalism, in my opinion. Saving
Agree.
is for losers, in my opinion. And that is something I have had to learn over the years from Robert Kiyosaki. Investors go out guns blazing and they learn how to take advantage of market condition. The idea that I'm just going to try to hold as much money as I can and curl up in the fetal position over in the corner and put it in my bank account, bad mindset. It's
Sure.
not going to get you where you need to be.
Let me stack cash under my couch. Yes, that's going to work out. And the one thing that people got to realize is that when people like Kiyosaki or you and I, when we say that's a loser's mentality, We're not talking about the individual. We're talking about the investment strategy. We're talking about money devalues because it's a fiat currency and inflation goes up, which means every dime you save has less value, which means it loses value. So when we say the word loser, people are so quick to be like, do not call me a loser. Do not judge me. And we're like, we're not. We're just judging your investment strategy. It's a poor investment strategy.
Yeah, I know what you mean. And maybe there is a different word, but I think sometimes words are supposed to be sharp for a reason. I mean, sometimes you use a sharp word because you need to make a point and get them to really understand and say, okay, where am I at? What do I need to do?
Why can't we say loser? It's a perfectly acceptable English word. It means devalued. Okay, yeah. It means it goes down. It means your money loses value. Okay, why do I have to find a easier word for a consumer not to get offended at? That's not my job to not offend people. That's not what I do. I don't go into my day thinking, how can I not offend somebody today?
Right.
How can I be as politically correct and mindful as humanly possible? Yes,
well,
that is going to impact change.
You're right. I think you're 100% right. I agree with you. I think the one thing I would say is, if you go out to intentionally offend people,
no, of course not. You don't want to be an asshole.
But I think sometimes you can intentionally try to jar somebody's mindset, and you're being a coach or you're being a mentor. I mean, it doesn't necessarily have to be a negative when you know that, okay, I've got to change their state of mind. Matt, I had a class this morning. I woke up at 5 o'clock to teach people from Hong Kong today, and I had a really cool little class. It was a small group, and only 3 out of 10 of them got their homework done. And I'm going to tell you what, as a mentor, when I wake up at 5 a.m. to teach somebody from across the pond all the way in Hong Kong, and they give me excuses about not doing their homework, I'm not going to listen to that.
We're not patient in that capacity. Yeah. We're not going to be like, I totally understand. Life's hard. We all, nonsense.
Yeah. And this idea, I got to tell you, this concept that I'm busy, holy hell, if I hear that one more time from somebody, I'm probably going to lose it. Everybody's busy. Yeah, we're all busy. We all have 24 hours in the day. Learn how to use more of them more efficiently and stronger. Yes, you are busy. I know. Well, turn off,
Tim,
that
you're
Facebook
busy.
feed
I'm busy. Yeah, stop scrolling through Facebook for 2 seconds. You might have 2 more seconds to learn how to invest. Here's the reality, okay? Everybody's busy. This is my day today, okay?
Yes.
I'm going to trade all day long. That's what I'm going to do. While I trade all day long, I'm podcasting today. I met with a hedge fund for 2 hours today. 2 hours. Great conversations with this amazing hedge fund, okay? Because we're looking to do business deals with this fund. And later on today, I'm going to teach an online event where I teach people from around the world how to trade Forex. Okay. After that, I'm going to run one of my businesses for an hour. That's what I'm going to do. I'm going to run one of my businesses for an hour. Then I'm going to do the coach's show at 5 o'clock.
Is that a nap? Is that running one of my businesses code for a nap?
It is. Do you get it's click a button and then take a quick nap. It's called the power nap. Most power naps last 10, 20 minutes. Mine lasts an hour. Tim, I did just turn 38. It's nap time for me.
You get a nap, yes.
And then I'm going to make sure that all my currency trades are doing good. And then I'm going to get up, and tonight I'm going to teach another event. And, I'm going to wake up tomorrow, and I'm going to fly to Philadelphia. And when I'm on the plane in Philadelphia, I'm going to be trading the Fed. That's what I'm going to be doing. From 38,000 feet in the air, I'm going to be trading the Fed. When I land, I'm going to go to the hotel. And you know what I'm going to do? I'm going to do some more trading because I love trading. And then I'm going to, for the next 3 days, I'm going to teach some amazing people from Philadelphia how to trade stock and options, commodities and currencies. And then I'm going to fly back home. And on Sunday, you know what I'm going to do? I'm going to relax with my family. And then Sunday night, I'm going to prepare for the week that comes. And I'm going to do this over and over. And I'm going to run 5 businesses in that entire environment, Tim. And why is it that I can do all of that stuff? And why is it that you can do all of that stuff? And yet we still have so much time in our day to do whatever we want. You got to think about that for a second.
Oh, I've thought about it for 12 years, which is why I'm building what I am to where I'm at. And, this stuff grows and grows, Matt. This is why
Tim,
I'm so passionate about getting out there and getting people to change that first mindset. Because if you can get out of this idea that I've got one job to pay my bills and it drives you crazy and it drains you of all your energy and then you just don't go out there and do anything, you never get over the hump of seeing how you can leverage your time and your ability in much, much more creative and more efficient
Here's a simple
ways.
reality, Tim. Here's a simple reality. The reason people like yourself, me, and other people like that, and there's a ton of people like that, more than you could possibly count, okay? The reason they can do those things, the reason they can build businesses, the reason they have more time, the reason they can go golfing at 10 o'clock in the morning on a Tuesday, the reason they can do all of this is because they have choice. The reason they have choice is because they don't spend 9 hours a day working for somebody else. They don't spend 2 hours a day commuting to go to that 9-hour job every single day. They don't watch reality TV. They don't get in and just, watch videos of cats on Facebook. That's why they can do all of that stuff. That's why they can create greatness. That's why. It's because they don't spend time working for other people, and in their downtime, they're still efficient. That's why you have the haves and the have-nots, and that's why this entire mindset of, well, let's not offend anybody, let's give trophies to all the kids, let's not talk about competition is insane. The world is a competitive environment. It is a game played by winners and losers, and yes, you have losers. That's the truth. And people don't want to hear it. And you know what, Tim? I don't give a shit. That's not my job to make sure they feel comfortable.
By the way, Matt, I will remind you that I did sing you happy birthday a couple weeks ago. I'm not sure you
really?
liked it too much. Yeah. Said happy birthday.
Well, as a justice, you know this as well as I do. We don't really support birthdays.
No, we're not big birthday people.
We were not raised on birthdays. There were 7 kids, middle class family.
I got my
too many
birthday
kids.
forgot twice. What are you talking about? Not raised on it. Mom forgot it two times.
I got a lump of coal for Christmas one year. Okay, that's just how we got down growing up. That's how we did things. But anyways, on tap tonight, Tim. Apple earnings tonight. Are they going to inspire like Microsoft last week, or are they going to die?
I am open-minded to this one, Matt. I was looking at this. I was pricing it out with my class last night. Projections from the market makers, about $7, $8 on the gap. At the money straddle pricing is about $9 on the gap. I think that they're accurately, pricing in the volatility. I don't think there's a big edge one way or the other. I don't know, man. I'll tell you, we had a big discussion in lab about whether Apple was a tech company or a consumer company. We had a really big discussion on what kind of company Apple even is anymore.
That's not debatable.
Yeah.
That is absolutely not debatable. Apple is a consumer marketing company. They don't produce anything. What are you talking about? They don't research and develop. They refurbish technology that's been produced for years. People who say they're a technology company are Apple whores. That's people who say that. There are people that will buy Apple products regardless of what Apple does. That's in that very mindset is why Apple is now a marketing / consumer driven company, because they know their consumers will buy anything that Apple puts out there. It is absolutely 100% a consumer company.
Getting down to the fundamentals, though, you have a couple of things that are going to be at play in this earnings. I guarantee you're going to read them in the headline when you see the result. I have no idea where it's going to gap, but I will tell you. Phone sales, iPhone sales, but also I think the iWatch sales. I think a lot of people are expecting iWatch sales, or whatever they're calling that thing, the new iWatch that they use.
iWatch, iPhone, iPad.
Yep. It's all driven.
I'm going to say iPad sells down.
Model. Yeah.
I'm going to say iPad sells down. Steady. iPhone sells steady. iWatch, that's the big one. I'm going to go out on. You're going to say up. I'm going to say there was tremendous demand for the iWatch, and guess what? I bought one too. I bought one for my wife. Okay, so there was tremendous demand for that. But I am going to say this. I will say they disappoint. I'm going to say they disappoint. So I'm going to say Apple as a collective will outperform the expectation because Apple is notorious for lowering their expectations just so it's like lowering the bar so that we can exceed it very easily. So I'm going to say they outperform the expectation on return on. But I'm going to say this is a tough one because it's like a crapshoot here. I'm going to say they go down, and they go down less than the expectation. That's what I'm going to say.
I'm not going to hold a position into it for sure, but if I had to guess, I'm actually guessing in an expanded gap, which means higher volatility than expanded just by a little bit. I would not be surprised to see Apple make a bigger move than, say, what the market makers are pricing. It's going to take a headline splash. It could be to the downside more likely. If you look at the Apple chart on a long-term view, it's at some pretty major support, So if it does gap down, look out below. My best guess, Matt, is
5% gapper. Apple is a notorious 5% gapper. That's what Apple does. And that's 5% either way. That's right in line with your $7 on $115 stock. So it'll be interesting to see what that does. I think they're going to gap around the number. They're historically around the number. Nobody knows if it's up or down. You really don't.
You never know. That's earnings, but it's not going to surprise me 1 second if it is up. Some people just absolutely love Apple if they can come out and manipulate earnings, because year-over-year earnings growth has actually been decent based on their numbers. Market's been strong in October. Earnings season's been kind of a dud. Not a lot of gappers down or anything like that. So I wouldn't be surprised to see it gap up, Matt. But it'll be a fun one to look at.
It's obvious. It's the number one company in the world, the highest market cap company in the world. It's absolutely 100% going to be followed by every other company in the world. The one thing I will say is they're not going to have a blowout like Microsoft did last week. Microsoft, oh my God, 10%, a $10 move, a 20% gap on Microsoft. It doesn't happen on Microsoft. One of the best performing stocks out there right now. Wouldn't be shocked if I saw a retracement on Microsoft. But Lord Almighty, that one earnings report shifted Bill Gates to the richest man in the world. Boom. Bill Gates, not a college. He didn't graduate college, right?
No, but one of my this will be the last, and we got to end. One thing I love about Microsoft is you've got different leadership styles out of like Steve Ballmer and Bill Gates, and this goes to tell you out there that you can be yourself and still be
Ballmer's kind of insane.
Steve Ballmer comes into a room like a bull. He will run laps around the audience, screaming and yelling and waving and high-fiving.
Oh, when I say insane, I'm not meaning bad. He's got a little insane to him, right?
Sure.
So, yeah.
And Bill, anyways, Tim, sit down and start talking. Different styles can still make great leaders. Yep.
A lot of ways to make money in the world. A lot of ways to make money in the universe. I just say make it off your money. That's all I'm going to say for the Trading Justice podcast presented by Tackle Trading. For Tim Justice, Matt Justice, and producer Phil, we are out. If you like the podcast, make sure you rate it on iTunes. If you don't like the podcast, just download it anyways. Thank you very much. We'll see you next time.
Peace.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.